Hello, hello. So today is one of our last two chapters of this entire thing. Start posting them all after going through the live. I didn't really know how to just create these videos, but yeah, we're going through something very important today, which I have very different opinion on than I used to have. It's about prop firms versus live accounts. So props and lives, you hear it from a lot of very good traders that none of them that are driving the Lamborghinis and all those things are really actually trading with props. All they do is they give their discount codes out and they do those kind of things for their affiliates and they make a lot more money from it. And then they have their live accounts where they really place down 60 contract, 100 contract trades for $60,000 to $100,000 in one certain trade, maybe even up to 500K in a certain trade. Options plays, safe routes, of making multiple millions from crazy options plays like a SanDisk. Having a SanDisk option from last year that expires anytime this year would be it would be better than Tesla's from the 2017 era. But that's the idea of prop firms versus life capital. Prop firms don't test skill; they test discipline or constraints. Capital changes behavior. Constraints reveal habits. Discipline matters more than talent. Rules expose weaknesses. This chapter teaches about all of this. Why this chapter matters. Many traders misunderstand prop firms. Rules are a mistake for unfairness. Misalignment causes failure. This chapter prevents costly mistakes. So I think prop firms generally are a great way of making money, and figuring out how to actually milk them is the biggest thing. Prop firms provide capital to traders. Traders operate under strict rules. Profit is shared. Risk controlled by firm limits. Evaluation proceeds funding. Capital is conditional. Okay. The business models of prop firms. Firms manage risk, not traders. Rules protect firm capital. Scaling is controlled. Draws are limited. Consistency is rewarded. Violation ends participation. Discipline is mandatory. It's very important to read through an entire contract and actually know what you're getting yourself into, because sometimes, and a lot of times, prop firms, when you make too much money, will then take you live, which is totally fine because then you have free accounts in the live, right? And then all you have to do in those live accounts is try to trade it up and make the exact same thing happen. Build out the capital as long as you can. We don't have to jump back to your actual cash flow in those ways. With prop firms like TopStep and stuff, it can help you grow your audience, which is huge. Apex as well. Lucid, I've heard great things about with Lucid Pro Flex accounts or whatever they're called. And yeah, I've been live on TopStep. Now I'm going live with Apex. And those are the things that are kind of complicated. The live capital doesn't make that much of a difference in those ways. And all you really have to be focused on during this entire endeavor is that you just don't get too thrown off by it. I mean, if you really think about a live account from a prop firm, let's say you buy one from whatever firm, I mean, you got to be careful because of certain things with them. So let's say you buy any prop firm. You really only get $1,500 from them for the $50 or $150 you put in, and then you make $9,000. Then you have to make $3,000, but all you really actually want to have on the side is $3,000, and then from those $9,000 you didn't make anything. So let's say you put in $1,000 to $1,500 into your live account on AMP. If you make $9,000, now you have a $10,000 account. Pretty crazy. If you really wanted to put in $5,000, you would have a 300K account with certain prop firms. If you lose it all, you actually lose $5,000, which would have cost you $300 to actually have. Right? So that's your choice. Where's your risk to reward? Are you that good? Are you willing to take the huge risk? Then go that route. Otherwise, prop firms can teach you a little bit of stuff here and there. Some of them just make you freaking crazy. Like personally, in the beginnings of Apex accounts, it made me crazy when it had the legacy account where I'm making a trade and I slowly have to change my entire trading style, and I'm going for $1,000 or so in a trade, right? Now all of a sudden I'm up $1,000 and the drawdown is now break even. So all of a sudden it starts coming back against me. I'm like, okay, fuck, okay, that's a blown account instantly because I didn't go with their consistency rules or with their idea of trailing drawdown. Very sketchy play. sometimes the market just moves in those kind of ways. It's volatile as heck. So you go up 40 points, you almost have to be perfect with your entries. It makes you really, really good. It made me so good at trading the Apex accounts at the beginning of it. But then you want to change those rules, and then slowly it's more about the idea. If you have that $10,000 account, which then my account grew from 20,000 up to like 80,000. But then at 80,000, I lost 20K in a day, one time, back to 60K, couldn't get past it. Then all of a sudden, one day I had a $60,000 day, another 30K day after that, and built my account out to like 400,000. Then the entire life thing came in, which was very interesting. So you gotta be careful with certain things that you sign. But I'm very excited for it. Now it's in an escrow vault, which is gonna be great. And now I get to trade with them tomorrow. Maybe I start the live accounts to have that challenge of trying to make up to $1 million to get my 220K out. And the rest of it, they already paid me. I put in $20,000. They paid me $144,000 in a matter of 4 months. That was really, really great. And the contract clearly states you can only take out 25% if you make to pay out 4. You're there for 4 months. So read through the entire contract if you guys haven't with those stuff. But it would have been, of course, crazier if I now had 400K that I could put into my own live account rather than playing again with $3,000, which is sketchy. But that's what I signed, and that's what I'm into. And there's no problem with that. That's just the way it is. So we go with it. Why most people fail with prop firms: overtrading under pressure, emotional sizing, chasing payouts, misunderstood constraints. What prop firms actually test: risk, consistency, drawdown control, emotional discipline, process compliance, patience under constraints, survivability. So that's kind of the thing about those. What makes it so complicated is that exact thing, because I also had something very, very similar, because I actually had $67,000 on my prop for Top Step when I was live, which then also was a huge issue because I had 67K, took out 14K, or like 14 to 20K when I made it up to 50,000, which now I've heard Top Step has a different rule there too. They like don't give you your entire account balance anymore, because I tried keeping it for 30 days, but it took me live on day 28, which I thought was super cool, and I was super stoked at the time. But then I realized, okay, I can take out $5,000 now at 50K, and then my payouts, of course, were larger, and I could have taken out all of it if I really wanted to, which is cool. But nowadays, you kind of get blocked out of taking too many payouts, which then at some point it is like they're trying to help you how to trade. So at some point, you should maybe think taking it to the next step. It's first the beginning stage of milking some props until they all ban you or take you all live. They all have live programs. That's great. Now you have 6 accounts, even though you're only legally allowed to have 1 account to trade. So you have an Apex account you can trade live. You have an account for Top Step you can trade live. You have an account for Lucy you can trade live. You can trade one for all of these different ones. Alpha Futures probably won't take you live, but I don't really know. And then you have all those kind of things, and you want to milk those prop firms by just taking out as much liquidity as you can. But the thing about learning how to trade with them, it's very complicated, and you actually don't have that much capital. So that's why it's kind of a very interesting game they play. And it's simulated funds, which is also stated in the contracts. Prop pressure is artificial, live pressure is personal. Behavior changes with ownership. And that's one of those things too, that, for example, prop firms can make it more complicated. So now if you only have $1,000 on your account and you make it up to $10,000 in your account, now you have $10,000 to play with no restrictions on the money, which would be more than a $500,000 prop firm account in theory, which is crazy. But if you think about drawdown in that kind of way, if you have 150K accounts, right, your drawdown is, your DLL is 3,000. and you have 4,500 generally as challenge failed on top step. So 150k, that's two of them. So if you use less contracts, in theory, you would have with two already 9,000. So then if you have five of them, which the max would be 4,500, would be 2225. Does that make sense? Yeah, 2225. So 2225, you theoretically would have 600,000 or $750,000 of prop money in your account. So if you have a live account that's 250,000 or $25,000, you actually have 750k of funding by the way they do their maths. So the advantages of prop firms: access to large capital, limited personal risk, structured discipline, forced risk control, experience under rules, scalable opportunity, and skill development. Disadvantage of prop firms: strict drawdown limits, rule complexity, psychological pressure, limit flexibility, profit splits, account resets, and external controls. I think the biggest advantage of prop firms is you're a contractor, 1099 income, don't have to deal with certain tax problems here and there that you would have from an actual live account because every single trade could be counted. And then, depending on the things with the washing rules and stuff, if you trade the same thing twice in a month and you make a lot of losses, that those things don't get canceled out, so you don't really truly have those losses you would have if you traded, for example, a prop firm, well, it's just a payout. It's nothing else involved with it. It's just a contract. When prop firms make sense, capital is limited, discipline is developing, risk rules are respected, scaling experience is needed, structure is beneficial. When life capital makes sense, discipline is internalized, risk rules are followed, emotional stability exists, capital is protected, independence is preferred. Scaling through prop firms, scale slowly and deliberately, maintain consistent sizing, avoid payout obsessions. Also very true, just build the accounts like it's your live account you always wanted in your entire life. So if you put in $500 or $1,000, you can buy 550k accounts. If your budget is $5,000, there's some people that milk them. So then you buy like $10,000 worth of props, and in that month you would want to make $15,000, so it's $5,000 more income. But what you really would want to do is you go for like a 3-to-1. So you'd have to make 30k, so you make 20k months. Or you take it as a strategy, you want to keep them long term, and some of them will then turn into live. So just do whatever seems correct in your mentality. Some people like it one way, some people like the other. And then when your accounts are like $50,000 accounts, you might get taken live, or you can take out a huge payout at that point in time for the good work that you have done. The institutional view: capital is allocated conditionally, traders are evaluated continuously, risk comes before reward, discipline earns trust, skill follows proof, longevity is rewarded. And after some point, just create your own account. And with a $40,000 account, you can use up to 40 contracts, which is quite crazy. So then, if you make one really good trade with 40 contracts for futures, I've been seeing good old TJR is doing 60 contracts or 100 contracts each time he trades. So it's like 50 contracts would mean each contract would be worth, or every single point would be $1,000. So if you have 50 contracts in, it would be $2,000. I'm pretty sure actually. But actually, no, it's a 1,000, right? So 10. So one contract is 20. That means 10 contract is 200, which means 50 contract is 1,000 per point on the Nasdaq. So with a crazy move of 10 points, you make 10k or lose 10k with 50 contracts, which you would need $50,000 in an actual account to do that, at least with AMP, because each contract is $1,000, they say. So it means to lose the entire 50k would actually liquidate you pretty quickly if you would do something like that. 50k would be 50 points. I think that math is correct. Because if it's 10 points, it's 10,000. That means 50 points, 50k. So if you go down 50 points, you're donezo. Or you could try doing the $1 million challenge from $1,000 with 10 contractors. So, and you keep running it and you keep running it until it doesn't work anymore. Honestly, it's more of a forex thing, but actually, now thinking about it, it's not that difficult to do. Key takeaways: prop firms test discipline, rules expose weaknesses, capital change behavior, structure matters, consistently earn scale. Business thinking is essential. And there's always new chapters and transitions to everything we do. So I think both are great. I personally love prop firms. At some point, it's like very easy. I think the Apex ones are super cheap. They had some struggles with the live project, and I was part of that entire thing. I waited 6 months for my accounts, and they paid me out 144,000 out of 400,000, which is still a lot of money. I was hoping, of course, to get all of it, but who cares? They now put it into an escrow, which I can work for in a live, and life goes on, and I'm working with them, so we'll see what happens. And then, yeah, then, well, I'm not working for them. I'm just a live trader with the same contract as anyone else. So, not affiliated, nothing with that stuff, but that's how it works. And then the same thing with Top Step, they give you a great option of those things too. And they're all actually kind of cool things to be a part of, and making it into that elite level of live prop firm trading is, of course, huge. But otherwise, if you just want to have your own accounts, just get your own AMP account, whatever broker works in your country. And yeah, there's a lot of friends you can meet on the roads too once you get into it all that can really help out with those things. So yeah, thanks for watching. Make the right choices. Maybe build out a few props, create some money models on the outside, and then have more trading on your live account. Take that money, put it into your live, take the rest, taxes, this, there, savings options, build it all out. More, trade with those again, those again, those again. Keep your props as safe as you can. Rather than using the money of your prop firms to say like, oh, these are like dirt cheap, and you make like whatever, like $1,000 or so like that for them is crazy. If you just make $20 a day for all your props for a long, long time, like literally keep them alive for years, you can make great money too, or $200 or so. Just not overdoing the craziness of it all. Taking that money out, putting it into your live, putting it into your own life, doing all those things way more important. Taking the structure of all of them, creating your own live account, trading with them live, making a little more success, maybe getting some other things from YouTube and stuff helps out too. So yeah, and you can just teach people if you have some lessons upon it. So thank you guys for watching. If you have any questions, put it into the comments. I'll respond to everyone. And God bless you guys. Peace out. Hope that was helpful in any way.